Candlestick analysis has a major comfort factor built into it. The visual aspects of candlestick signals allow a candlestick investor to assess which direction a price movement should occur, whether analyzing the general markets or the general market indexes or individual stock prices. For example, today the Dow traded lower, below the T-line, and supported on the 50, but still didn't show any signs of strength. We were in a negative day right up until the best part of the day was near the close. However, we were able to analyze during the day, based upon numerous positions that had already been recommended, that they weren't selling off. So this indicated that this market was not a massive sell-off. It was just a pullback, which we're suspecting will pull back to the bottom of this trend channel. You can see there is kind of a channel forming. So we're watching to see, once it gets down into this area, what type of signals will occur. However, at the same time, there are positions that have been recommended that are still using the T-line as support and having strong days. This is because candlestick signals and the analysis of those signals allow a candlestick investor to see where the trading is actually occurring, not what all the rhetoric is about market conditions or sector conditions, what's actually being bought and sold in specific stock prices. We've recommended ISIS for the last few months, and it's never been off the recommendation list because they couldn't close it below the T-line. The strength in this stock obviously is based on something that is external to just the market conditions. And in many cases, recommendations that have been made, even though they weren't up strong, they weren't down. They were still holding on. And this is still a part of the total analysis of what's going on in a trend, that if you can see that there is buying support, especially using something like the T-line as support, that no matter what the market's doing, we've already identified what's going on in each individual stock. There is buying pressure continuing. And knowing the different candlestick patterns, such as the J-hook pattern and the left-right combo that was a part of the showing that the J-hook pattern is in progress, continues to illustrate where the buying pressures are in specific stocks. The nice thing about candlestick analysis is that the statistics are the results of what has occurred over hundreds of years. The same patterns, the same formations. And that result becomes more confirming to investors the longer or the more often they use candlestick signals. It's not unusual on a day like today, when the market is down, that your portfolio has 60–80% of the positions positive, even though the market was going the other way. That'll be it. We'll see you in the chat rooms.